Let us now look at the topic of preparing financial statements. So there are 4 basic statements required, and this is a very broad overview of what order we prepare the statements in and what appears on them. The first statement, the income statement, begins with revenue, and we would list these out, although very often there's only a few revenue items. Then we subtract expenses, and we list them out. Normally there will be quite a few expenses. We'll list them all out, and then we'll total them. On the income statement, revenue minus expense is net income. This is usually the first statement we prepare of the 4. And the reason is we need net income to do the next statement. The second statement we prepare is a statement of retained earnings. In this statement, we start with beginning retained earnings. In the first year, that would be 0, but in the second year, it would be the end of year 1. We add any new shareholder investments. We add net income. See why we needed to prepare the income statement first? Then we subtract out any dividends that were paid to the shareholders, and we arrive at ending retained earnings. This statement needed to be prepared second because now we're going to do a balance sheet. And when we do a balance sheet, we're going to need ending retained earnings. So the third statement that we prepare is a balance sheet. On this statement, we sometimes put assets on the left and liabilities and equity on the right, and sometimes we put assets on the top and we put liabilities and equity on the bottom. It's not as important which one we put on the top. It's not as important whether we do top, bottom, left, right, as it is that we have assets on one side, liabilities and equity on the other. And just to clarify, in case I misled you a minute ago, assets always do need to be on the top or on the left. So with the assets, we would list them out and then arrive at total assets. In later chapters, we learned we have to separate the current assets from the long-term assets, and we create total assets. Then, on the liability side, we separate out current liabilities and long-term liabilities, but list them all out. We arrive at total liabilities. Then we add in equity, which includes common stock, retained earnings, ending retained earnings. See why we needed that? And then, actually, this is a misnomer here because I say that we have a subtraction of dividends, but in truth, the subtraction of dividends appears on the statement of retained earnings, and we really don't need this on our balance sheet. So in the end, we have total assets on the left or on the top, and they have to equal total liabilities and total equity on the bottom or on the right. Now, there's a whole different approach we need to use to doing the cash flow statement. So already, as you're seeing this video, you've done simple balance sheets, income statements, and statements of retained earnings just because of the normal things you had to do in the class. But with a statement of cash flows, the presentation's important, but we tell you in detail what this statement means and how to prepare it in Chapter 12. Simply put, the cash flow statement is cash flows from operating activities plus cash flows from investing activities plus cash flows from financing activities. This provides a net increase or decrease in cash. We'll add this or subtract it from the cash beginning balance and arrive at the ending balance. And this is the form the statement will take. Let me know if you have any questions about preparing financial statements.